Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 308. And I hope you're not investing in the wrong stocks. By wrong stocks, I mean stocks that are dropping through the floor. There are no earnings, and the future is anybody's guess. So we'll talk about few of such stocks in the market and what the future may hold, whether you should buy them or not, whether you should get out of them right now. We'll talk about that. But first, a look at the markets. The markets were very dull through the day, practically till about 2:15, 2:30, and then there was a sharp drop in the markets, pretty much on back of Dow futures giving away some morning gains, and we kind of followed suit. So it may have been just a sort of a intraday sort of a drop, especially on the expiry day. But we'll find out tomorrow whether it sustains or not. PSU banks again taking the lead today at plus 0.8%. And as you can see on this chart, the autos were the least, uh, were the worst losers, minus 1.4%. Consumption stocks and IT stocks losing almost a percent each. Energy, commodities, pharmas, everything losing. Nifty ending a minus 0.4% down. Most sectors in the current 1 week have remained largely flat except for IT, which took a bump up, and some banks that have been going up. As you can see in the broader indices, small caps down 0.1%, mid and small caps down 0.3%, CNX 500, CNX 200 both down 0.4%, Nifty Next 50 has been dropping hard, 0.75% down. For weekend investing, small cases, MI35 up 0.5%, a bunch of other small cases all near 0 to 0.2%, and then some deeper cuts in MI25 at minus zero point 0.7, MIATH at minus zero point 0.8, all cap at 0.66, and NF10 at 0.55, but still very much within the realms of the market moves. So nothing really much to infer from there. Heat map for the day you can see is largely red. Adani Enterprise, which had dropped a bit on the previous session, made a slight comeback. But other than that, you can see there are deep gashes on Mahindra, Maruti, Titan, Tata Motors, some ground lost in Coal India, more so after yesterday. Hindustan Levers, HDFC Bank, Infosys, the list is long. NTPC and Power Grid. Power Grid gradually up, slightly up, but NTPC down half a percent, 1%. Top gainers within this dull market: Timken 20% up, Engineers India 10% up, Union Bank another 6% up. Union Bank has been going phenomenally well. Godfrey Phillips doing really well, plus 6%, and NLC India plus 6%. So some very good movers therein. 197 PAYTM down 10.2%. We'll talk about this. Info Edge down another 6%. Now, Info Edge has been losing ground dramatically in the last 6 months. Nazara down another 6%. Adani Transmission badly hit today, minus 4.7%, and Brightcom Group minus 4.7% today. So, coming to the topic of the day, whether we are invested in the right stocks or not. So, Paytm, there was a block deal. The Japanese investors who had offloaded some in the IPO have now offloaded 29 million shares of the company at 555. So a discount of almost 8% to what was traded yesterday, about $200 million worth of transaction done. It seems to me that even large investors behave very similarly to retail investors. Everybody goes through the same emotions, and while this ticket size may be no, uncomparable or not comparable, the behavior remains pretty much the same. And this is, to me at least, it is showing me that even very large investors are pairing their exposure in stocks that are down 80%. Very recently, we had also heard that Charlie Munger had cut down their exposure in Baba after it had dropped 50, 60, 70%. So the difference that large investors versus the retail investors is that they are able to take painful decisions, and they are able to even sell at such lows. Most people with a 70-80% cut on their portfolio will not have the ability or the gumption to cut their position at minus 80%. But always remember that even after an 80% drop, there is still a possibility of another 80% drop of whatever capital is left. So nothing is sure at any point of time unless you have a very crazy sort of a view or forecast, or some sort of a prediction, or your ability to see things in the future. Unless you have that, it's very difficult to after an 80% drop, sort of not not sell out of your position if you're doing rational thinking. Of course, the other side is that I've lost 80%, so I'll take a risk on 20 and I've written off this investment. That may be another viewpoint that some people may have, but this is something that you need to think about as an investor, in terms of how much pain you want to give to yourself. This stock, when it listed in November 2021, has completed 1 year, and the lock-in is now open. And lock-in is open in other Policy Bazaar and Nika, etc. So what we are seeing is that despite the falls, the locked-in shares are coming to the market for sales. So essentially it shows that the people who have been holding these shares were just waiting for the gate to open for them to sell, and they want to sell. So there is no long term story intact, it seems. There is no confidence that we should be doubling down on this investment. If we invested at pre IPO levels and the stock is down, and we are uh, you know uh, sort of confident about the future story, then SoftBank should have been doubling down on this investment instead of selling out at 70% down. And also, in any transaction that is happening, please note at what rate is the transaction happening. Had it happened 7% higher than the previous closing, it would have meant that the buyers are keen to take on that position and the seller is agreeing to it. Here, because the seller wants to get out at any price, the buyers may have agreed at minus 7% of the previous closing to enter the stock. So the negotiation, or the ability or the power of the buyer or seller is evident based on the discount or the premium that they charge on the existing price. So with this fall, Paytm is now down to its lowest levels on the weekly basis. Probably it is, if we close at today's level, on the weekly basis, we may close at all-time low weekly close, and that is never a good sign. It may be a bottom. Sometimes what happens is, when capitulation happens and the largest of large investors also throws in the towel, that may be the point where the stock may start to come back from. But how can we guess that? We really can't do that. So my sense is that, while when this peak was taken out here, there was a chance that the stock has seen the worst, and higher highs and higher lows are getting made. But once it bounced off from this level, which was a support, and a small head and shoulders got made here, this was the giveaway that you need to get out here, and it was going down again. So have some basis on which you want to hold on to some stocks, some cutoff, some stop losses, or some ability to analyze even fundamentally some numbers, and say that, okay, below this performance, I am not willing to hold. I'm not saying momentum investing, because momentum investing would not have entered this stock at all. So you would have never got caught in this from day one, because we would not have gotten into a stock with less than 6 months or 1 year of history. And in any case, even if we did get in here somewhere in some strategy, in case we did, we would have gotten out somewhere here, not waiting for a, 30%, 40% type of fall. Another FSN e-commerce venture, Nika, again the same thing. They did sort of a bonus. I wouldn't call it manipulation, but the bonus was announced the day the lock-in shares were to be released. So now the locked-in shares will have to wait for the bonus allocation to be sold down, and I will not be surprised if we see much lower levels from here. And again, the same is happening, that you're seeing higher lower lows and lower highs on this stock ever since it sort of got listed on this. Fintech, the Policy Bazaar stock, again same story. It just continues to make lower highs, and it's again witnessing stocks that are coming out of the lock-in phase. So the idea is not to bash these stocks or to say that these stocks will not do well ever. Maybe they will, but the thesis is that why would you want to inflict so much pain on yourself? I can understand some people do want pain because that is how they function, but a lot of us would not want any pain in our portfolios, even at the cost of maybe slightly lower returns, if you may will. So I mean, people go to lengths to avoid pain and still have a reasonable outcome on their portfolios. So this is something, just some thoughts that I want you to have while you create your own set of rules, while you create your own process by which you invest. I'm not saying this is applicable to momentum investing, because these stocks would have never entered momentum investing. For instance, this stock would have entered momentum portfolios. Meta Platforms, this is the Facebook stock, and you can see that since 2013 it went from 20 to 380, so 20x it went up in matter of 8 years, and it has taken just 1 year to unwind 75% from the peak. So this is crazy pain. I mean, this is not going to go back to 380 in a hurry, most likely. That's not how stocks which drop 70-80% function. They will drop, they will try to find some base, then they will consolidate for some time, maybe a few years, and then once all that negativity has been absorbed and some restructuring has happened, and all the people who wanted to exit the stock have exited, and there is no very strong upward pressure of selling coming, only then the stock starts to move, when fresh liquidity comes into that stock, and that is a process of bottoming. Usually it will not happen on a knee jerk basis. So just imagine somebody coming in the IPO in Meta and having the amazing conviction that this company will do well, and indeed getting 20x on their investment returns, and yet today sitting after a 75% drawdown, while they're still up maybe 4 5x in 8 or 9 years, but nobody wants to be happy with that 4 5x once you have seen 20x. That is sort of the human side of this behavioral thing, that we will not be happy that the stock is available from 40 to 113, so 113, so we are up 3 times in 10 years, which is still not bad, but but you're down from 380 to 113, which is the pain that would have got infected. So maybe at some point around 220, maybe 200 somewhere, you would have gotten out if you had a process. Maybe you would have gotten out here itself and not had this last rally. Something could have been done, but of course any decent plan would not have allowed you to go to this kind of drawdown. So this essentially happens because of hype. Sectors, stocks, or bull market sort of scenario where everything within a particular sector is running. That happens only. These kind of bull market phenomena causes blind buying at every level. just because one stock is from a particular sector. Like for instance, most of these are technology stocks which came for the new IPOs, and that hype is also linked to the crypto hype that we've had in the last many years. And it was very interesting to see the statistics today that this survey done by Statista, a very reputable global consumer survey company, and they say that India is leading in terms of the number of the share of respondents who said they used or owned cryptocurrency. So just look at India's topping the charts here, versus Brazil, versus US, versus Spain, versus South Africa. I'm myself quite amazed that between 25 and 30% people who were respondents to this survey said that they have either used or owned cryptocurrencies. So it seems that a lot of our folks are very savvy in terms of trying out new things, but hopefully they have made some money and gotten out, or at least have taken some profits off the table. So never get trapped into a hype. If there is a hype and you are into it, do try to take off some of the table, because the hypes never last, and the bell curve will take its toll, so as to say. So that's the end of today's daily bite. I hope you are enjoying watching this daily bite as much as we enjoy making it and broadcasting it. Please do share it with your friends and family, and do give it a like if you like the content, and I'll see you in another video. Bye.